Good morning, everyone. Hey, Jerry, how are you? Morning, good morning. Welcome to the Trading Syndicate. I'm JJ. Hope everyone's doing well this morning. Lonigan, hey, Jiraj. Johnny, how are you doing? Welcome, welcome. Bit of a slow night in Walmart tonight. Let's see what we've got here. Hey, Shanghai. Hey, Moran. Raj, good morning. Good to see all of you. And welcome to the Trading Syndicate, where we teach people how to trade and see the markets like an insider. Okay, so overnight inventory is a bit mixed, and usually lately we've seen inventory long, short. Now it's kind of half and half above the close, half below. The main thing to remember is we are inside yesterday's range and inside yesterday's cost basis or value area. So the practical aspect of that, right, is that it's business as usual. There's really no change from yesterday. We are trading in yesterday's price range, and we are trading in the majority of yesterday's price range. 70% of the inventory is priced between 87 and down here at 68. So we're just going back and forth. Right now, the market is liquidating slowly, gently. I think the doc said he was in a trade for 4 hours. That's like a one of those slow cooker trades. Good for him. That's great. Waiting for it to liquidate. But when you see sellers and you have the time and the patience to monitor a position, that's great. So right now we are sort of just leaking lower. And what's going on is the people who are trapped long above the close are slowly sort of selling out, and we're trying to find that overnight low. We're trying to find the bid. I'll talk to you a little bit about the bid. The bid is a simple term that old traders use to indicate where short sellers are trapped. Okay? Now, why is that? Because when short sellers are trapped, they go and bid to cover, right? Buy to cover. You've heard of that? And that's what we're looking for here. We're looking to see where the short sellers are going to come in and start buying. Now, we'll go to the next chart, which is a little bit more in detail, and you can see where we took the low of M period and the low of L, right? And we're just kind of going back and forth here. the inventory is above us. The nightly inventory is above us, you see? And it's just sort of slowly leaking down. Now, J period's put in a low. And what we're going to do is I'm assuming, right, that if that J low holds, we'll just kind of go back and forth in this range and allow this inventory to fall down into this range. Now we might go put in another new low and come back up, and we did that in J when J took out I. Now K hasn't taken out J yet, but it's only been 7 minutes. So let's go take a look, because it's an inside day. You know, we just do our balance levels. We do the same thing every morning, and we have the same exact approach. And you could see the rotation here, right? You could see that all of these people who are trapped long above 64.82 are selling into it. All right. Now, Raj, I haven't even checked my email this morning. Thanks, Raj, for letting me know. It's telling us that at some of the firms, margin has been increased, so it costs more to trade. There are less people in the store. So basically what that margin increase is, for people who don't know, it means like they're cutting credit. So if you go to Walmart and they give you $1,000 to go shopping with, now they're like, yeah, you got to bring your own money, right? So there's less people who are likely to do business because they have to pay more to trade a micro, right? Hey, trade maker, how are you? Good morning. So once again, this is a lesson in being smart. When you see a market trade out like this and you see these really, really tight candles, right? There's no trade for us here, right? And I hate telling you guys that there's no trade because people don't watch. They're like, oh, there's nothing to do, right? So what do large traders do, right? Well, they'll build a position. So if you think that the market's going to go higher, you can build a little position here between 77 and 80 or 79. And then when it gets up over 80, you want to be selling into the 80, 81s. You know where that the sellers are going to be there, right? You know that there's going to be selling because inventory is trapped long above you. So you don't expect a huge move up, right? So you manage your expectations, right? That is the biggest thing in trading, is to manage your business expectations. So if you know that there are going to be sellers all over the place on the way up, right? How do you make money? You got to size up, right? You got to size up and sell into strength. And that's not easy. You have to have the capital to do it, and you have to be able to manage your trade. So say I was building a position here, right? I think it's a little too early, but I could be wrong. So say I was building a position and I'd be buying, between 79 and these lows here, right, in this little box, right? So let's say we do that with the micro, right? Let me open up my trading software. There we go. You can see that there's a seller at 79 and a quarter, right? You can see that. So what you want to do is put some bids in here, 78, 78 and a half, right? 77 and three quarter, right? That's how you start building a position. Now, how do you manage your risk on that position? Where do you put your stops? Well, if You have a lot of money, your stop is here at 75. If you're a little cheap like me, right, you'll use a break of 77 half as a warning level. And then my ultimate out would probably be here 77 quarter, 77, right? Now, because a lot of people have been asking me, how do you build positions? Well, first of all, you have to have some sort of conviction that going long is the thing to do. I think we're a little early because that point of control has not moved down yet, right? So, I think it's a little early to build a position. Let's watch and see whether or not I'm right. This is chop, and this is how wholesale traders trade is they build positions and then they get rid of them as the market moves in the direction of profit. Okay? You can't scalp this, right? So for scalpers, there's no trade for you, right? So let's look at the market mechanics. Like I thought since it's slow, right? Let's try and teach you guys some market mechanics so you can at least understand the mechanics behind how positions are built. Hope that helps, because otherwise there's really nothing to do except tell you guys go home, right? And since people are taking the time to tune in and watch, I think maybe I'll try and teach them something so they're not wasting their time, right? So say we're buying here, right? How do you manage this? So what you want to do is if you're buying a position, say you buy 5 contracts here, okay? You see the top of this candle here? Put a sell order there, right? Now, why do you want to put a sell order there, right? You're like, JJ, that's not a lot of money. Yeah, but when you're in business, sometimes you have to test a market, right? That's like when Kellogg's makes a new cereal, they don't spend $1 million on marketing a new cereal. They'll test it to see whether anybody wants to eat it. If people don't want to eat it, they're not going to make it, right? So you put a sell order here to see when the market takes out the 79 and a quarter, can you make a sale at 79 and 3/4, right? And what you do, because you know that they're going to be sellers all over the place, right? So what you got to do is you got to put sell orders. If that one gets taken out, I would put sell orders pretty much all through here before that level. So if we did go up, it would take me out. Okay? So that's the profit part of the trade. Now, what about if we have to take a loss? Because folks in business, you are going to take losses. You can't get around it, especially if you want to trade this way in a choppy situation. Well, your losses will be here. That's your warning level. So if the market takes out 77 and 3/4, you start cutting contracts, right? And you have to do that. You have to manage your risk with size. Because if you don't manage your risk with size, you will panic when it breaks and start buying and buying and buying and get blown up. Does that sound familiar? Like I get emails from people and messages from people. The market's liquidating. I tried to buy the dip. I tried to buy the dip. I tried to buy the dip. I got stopped out. I kept buying and now I have no money. Right? Sound familiar? Right? Do you guys find this helpful? Give me some feedback here. Where are the people in my room? Anybody awake in there? Hello? What's going on, guys? Time to wake up. Right? You guys are asking me about all this all the time. I start talking about it, everyone goes like a sphinx. Right? Now, it's a business expense. If you don't have an account that's large enough to handle the business expenses, don't do this. Okay? That's my disclaimer. Okay? Right? Hey, John, I'm talking about people who want to learn how to build a position. I'm going through the mechanics of it. Now, this is probably going to send you into a tizzy. So just relax and and kind of chill. Good to see you tonight, right? So what I'm talking about is building a position in chop and selling into strength. This is what wholesalers do. Because right now, John, the market is untradeable from a perspective of a scalper. So the only way to make money, right, or attempt to make money is try and build a position. But building positions are difficult because you have to manage the trade and manage your risk with size, right? And that's really hard to do to traders who are not trained to cut risk. So, if you are a trader who freaks out when they have to take losses, don't do this. If you're trading a small account, don't do this, right? But if you have the capability to learn, right? If you have the capability to learn, then you just kind of watch this and practice on the sim, right? So we do have a poor low. That's the only thing. Thanks for pointing that out, Moran, to the folks. That's the only thing that tells me that a long may work. And may is under quotation. There's competitive buying there, right? So using this methodology, right? That's your warning level. Your outs here, right? So use trimming and adding contracts in this area. Make sure you have those sell orders out because as the market goes up, don't let the grass grow underneath your feet. So as the market goes out, you're selling. You have to, right? So say you're like long 5 here, right? You see how when we got up here, they automatically started selling into it, right? That's because the people who are long here are selling into it, right? Get your sell orders out. Travis, for you, there's no trade, right? Right? And here's the thing, Travis, and I don't know, I think I'm going to say this probably a million times until I'm blue in the face. We're at all-time highs, right? Trading all-time highs, this is called price exploration, Travis. So when we're at all-time highs, the business has changed. And what normally works for you guys isn't working because we're in a period of unpredictable order flow, which means we have no idea whether the market's going to accept these higher prices longer term, or is it going to sell back down, or is it going to accept these prices and keep going higher in this short squeeze? So you have to have some sort of situational awareness, right? If I was just scalping, right, I would look at this and go, ugh, and go back to bed, right? Not trying to get you to go, leave the stream. But do you understand what I'm saying, Travis? Unfortunately, this market is in a period where it is going out and trying new things. You know what I mean? So you have to be aware of the underlying business conditions, right? So for a scalper, this is horrible, right? You might be able to build a little position and make a few bucks, right? So, Jiraj, you're building a position. You're not doing the traditional look below and fail. This is a more highly advanced trade, and I'm talking about it because there are some people who watch this stream who are consistently profitable traders who make money, right? Not everyone is an amateur, right? So I have to be aware of that and talk about more complex trades, right? Otherwise, it can't be kindergarten cop for everyone, right? There are people who are trading who watch this stream. You're confused about this strategy? Then it's not for you. It's a wholesale strategy, Spicy, right? What you're doing is you're using the fact that there's buying competition at 77 to build a position that when London opens, if it can't take out 77, it will rotate higher and you will sell into it. That is the theory. Now, does the order flow match the theory? Do you guys understand what I'm trying to do? I'm trying to get you guys to think, right? Instead of just blindly taking trades, right? And I have a lot of people asking how to build positions. So I'm trying to teach you guys how wholesale traders think and larger traders think. Okay? If you're confused, don't worry about it, right? This is a tool in your toolbox once you develop the skill and the capital to trade size and manage risk with size, right? So instead of me coming on and going, oh, there's nothing to do, and just sitting here for an hour, I'm trying to teach the traders who actually have the capacity to do this how to do it, right? So you build a small position, you have outs, and then you have places where you're going to sell, right? Now, what tells you that this is working or not, right? What tells you if it's working or not is the lows are getting higher, right? Now, let's see. So if you were long 5 contracts at 78, 78 and a quarter, put one out at 79 and a quarter and see if you can sell it. Yeah, John, size traders, brother, right? Not everybody is trading an Apex account and not everybody is trading a funded trader account, right? There are people who actually do make money doing this consistently. So I'm trying to show them how you would build a position and the mechanics around doing so. It's just another tool in your toolbox once you achieve a level of skill. That's all, right? You have to be able, right, to pay higher business expenses. Because if the market starts taking out 77 and a quarter, you have to start trimming your contracts, right? And if you cannot afford that business expense, this trade is not for you. Right? So if you're selling at 79 and a quarter, you're getting taken. Right? If you're not getting taken, then lower your price to 79. Now, you'll go, JJ, that's only a point. Right? No, the wholesalers, the order flow comes through wholesalers, Spicy, not from. There, now you made another sale. You see that? Order flow comes from everywhere in the market. Don't worry about the order flow. Those are the customers coming in. They come in through wholesalers. The wholesalers get the order flow. They pay for it, right? So what you're doing is you are trying to make a bit of a profit on a slow night if you have the capacity to do so, right? See how the market came right to where I said it would, and then it came right back down. If you didn't have your sell orders in, then you're SOL, right? You're out of luck. That's why you have to manage this process intelligently, the way I'm telling you to do it. Okay? You put your sell orders in, so as the market, because it's a slow market, right? It's a slow tape. Look, there it's offered there. See how it's, now you're selling, right? So if you buy larger traders who buy 10, 15, 20 contracts this way, right? On a 10, 15, 20 contract trade, if you make 1 or 2 points, that's how you make money on a slow night. Does everybody understand what I'm trying to say? Right? Well, John, you joined us late, so I was kind of in the middle when I said this is your risk right here. Right? Your risk is right here. So if you're long here, that's where your risk is. Okay? These lower lines are where your stops are, John. Right? This is how you build positions in slow, choppy markets. And it's not for everyone. The long was based on spicy that there is a poor low, which means that there's buying competition at 77. Very simple. You see that little letter here? There's only one by itself. On size, Omen. On size. So you're not risking the whole position, right? You'll start trimming contracts. And like I say, it's not, it's the only way to make money in this type of market if you have the capability to do so. Right? If you don't, it's not for you. You have to be honest with yourself. Right? You got to be honest with yourself. If you're a trader that has no skill, then wait for a better scalping situation, do the look below and fail. Right? But right now, right? Look at the bottom of those candles. Pay attention, guys. Right? You guys are asking all the wrong questions. Pay attention to the lows. Look where we built the position at 78. Look at the lows of these candles, right? You guys are asking all the wrong questions. But that's okay. This is how you learn. Poor low means it'll rotate higher, right? Exactly. It may rotate higher, right? So there's the next selling area. There's the next selling area. You sell into the strength of this move, right? There you go. 20 contracts in at 78, you sell them, and now you're out by 80 and a half. Thank you very much. Have a nice day. Done. You see? And if you still have some, hit them out. Hit them out. There's going to be a seller at 81. Do you guys now see how the trade worked? Right? You see the reason for the trade is the poor low. You build the position. You put your stop in there. If it breaks that, you start cutting contracts. You sell into strength so you take a profit. This is how wholesalers trade. This is why Citadel Jane Street, all these people make billions of dollars. This is how they do it. Okay? It's a valid strategy if you have skill. If you don't have the skill, develop the skill because it's another tool that you can put in your toolbox where when it's slow and choppy, right? But it's something you're going to have to develop over time. Okay? And if you're a trader that doesn't have any discipline, who doesn't use stops, right? Yeah, you need the money, John, right? And like I said, not everybody who's on this stream, John, is trading a $2,500 account. So I'm trying to educate people who have the means with another tool. Do you understand what I'm doing? Right? So you'd be out of your position by now. Right. You have to have the skill and you have to have the money. Do you have a video on how your sessions are divided in your TPO chart? Yeah, you just use the time, Omen. If you want, you can just download my chart book if you're using Sierra. And that's pretty much it, right? It's just another type of trade. Okay, so basically it's pretty simple. The Globex session goes from the Globex session goes from 6 o'clock p.m. Eastern Time to 9:30 in the morning, and then 9:30 in the morning is RTH to 5 p.m. The poor low is right here. It's a double. It's it's half an hour apart. It's harder to see poor lows on a candle chart, Spicy, right? It's not as obvious. You'd look at the K and then half an hour back. So I guess it would be you'd see this. If you were using the candles, you could maybe use this level here, right there. It's hard to see it on candles. That's one of the things I like about TPO. Poor lows, single prints, right? And where the inventory is very quickly, right? What I like about candles is it tells me where the sellers are and where they stop selling. So hang on. Omen, I'm going to send you my session times. Maybe that'll help. Thanks, Raj. And that's pretty much it. You know, it's a difficult market to trade for a scalper when it's this slow, right? Because the market's not going to an edge like Jiraj, right? It didn't go to the perfect trade would be a look below and fail of 75, right? Didn't happen, right? Now Moran might have taken that 79 long against the bottom of the 78 candles and then sold into the 81s, right? But the mechanics are exactly the same. Exactly. Thank you, Moran. And that's pretty much it. Does anybody have any questions? Yeah, you just need the right session times, Owen. Just need the right session times. Let me copy and paste mine. So, let me see here. You have to be willing to hold for a while, John. Yep. You got to sit in. You got to sit in it for a while. The poor low is really was the tell, right? It's the indicator that you guys would be looking for. That poor low. Okay. Exactly, George. Exactly. The poor low is the market going, psst, psst, psst. Hey, buddy, right? We're out of supply down here. Maybe you should go buy a little bit, right? Hopefully that makes sense. Folks, I'm going to cut the session a little short tonight. Got to run back in. It's that time of year where they run a bunch of tests on me, so I will let you guys go a little bit early. And thank you very much for joining me. Sorry for cutting it short, but if you have any questions, please reach out. And we will see you at 9 o'clock. Same place. And please come visit us at the Trading Syndicate if you want to learn how to trade like an insider. Thanks so much. Have a great morning, everyone. Bye for now.